Hello, good morning. Are we live? Let's see if we're live. All right, we're live. Sorry about that. So I guess this is a redo. Sometimes it looks like we're streaming and we're not. Good morning. And you can hear me there too. Welcome back to the show, folks. We have a Thursday morning here, a little bit after the market opened. And thanks for joining me here on YouTube from Cape Cod, Massachusetts, home of the Pilgrims, and actually at this point, home of a power outage yesterday. We were completely without power, and I was monitoring my positions from the phone in the dark with a candle. So it was kind of like my great cousin, Abraham Lincoln, watching things by candlelight. Just wanted to give you an update as we are still in meme stock land. Let's take a look at some of the stocks which have been making headlines as of recently. And one of them is this DWAC. And we can see the price action here over the last few sessions. Here's the story. Made it up to 175 on that first day. Most of the volume was that last Thursday here. And then since then, we've been slowly fading. And my prediction is this continues to kind of fade away into oblivion here as there's not much there behind this. Same with Fun. Now, Fun had a infamous move back a couple years ago up to 550 and then back down. So already has had a crazy story even before this meme stuff kind of started, but continues to be of interest to people. But I would be very careful with buying either of these because the valuation for them is very difficult to ascertain. Many people have decided to buy these stocks because they are a fan of Mr. Trump, and I would be careful about voting with your trades because it is something that we need to separate trading from our political views because, well, for one thing, DWAC isn't the end all and be all, doesn't represent Mr. Trump and everything he stands for. It's a holding company for this one business, and whether this business is successful or not will be determined a long time from now. And all the hype around this is hype at this point. And watching people talk about stocks on StockTwits, a lot of times the part that people miss is the price. They say, I love the stock's great. Anything that Trump does is going to be successful, and so I'm buying this. And, not to mention just that statement is a firecracker as far as depending on your political viewpoint. But secondly, it depends on the price, whether you buy a stock or not, right? You can pretty much a lot of people would admit that Apple's a great company or that Tesla is an exciting company. But what is the valuation? What should be the valuation for the stock? And where is it going from here? We know from the stock market what the valuation of a stock is right now. Let's talk about Tesla for a second. Tesla made a huge move last week and has been talked about by all the talking heads over the last couple weeks as it broke 1,000 last week on this big move up after the announcement that Hertz is going to buy, I think, 100,000 cars. Now, think about that. That's a lot of cars, 100,000. And this stock is a perfect example of the popularity contest of the stock market. The valuation here has exploded and compared to other firms that make similar products because there is this sexiness to it. There is this excitement about it. There is a buzz. And this is what drives stock prices a lot of the time. There are people there who are excellent at crunching numbers and figuring out whether a company is doing well or not based on the financial reports that they release. and comparing one company to another, well, you know, Nike versus Reebok, that's not a good example, but Pepsi versus Coke, which company is making the right moves, which company is financially more sound? And that is part of it, but a lot of the stock market is a popularity contest and is emotionally involved. Just pull up StockTwits if you think that stuff isn't emotionally involved, and look at the emotions on display there. This is like one of my favorite things to do, is look on StockTwits at different people's comments on these different issues here. So, and thus, the numbers, you can throw them out the window at some point. If people like a stock and they heard about it from their buddies, then it's going to go up regardless of the numbers. And a lot of this meme stock stuff has been this hype. Same with the DWAC. Now, it seems very easy, and in a sense, it is if you catch it on the exact right moment, to just jump in, buy 100 shares of DWAC, ride it up $1 and sell them back out, right? Or fun. And in a sense, the first people that got in on a lot of these issues have been able to do that. Jump in, buy a little bit of a stock, and then get out quick. But there's another group of people who've kind of like drank the Kool-Aid here, and who think actually that a stock like DWAC is going to actually have legs and is going to, like, you know, go from 100, 200, 500, 1,000. That's not the play here. The play is that these stocks are going to be a flash in the pan, and maybe you can trade in and out of them quickly, but you are deluding yourself to think that a DWAC can be compared to a Tesla or an Apple, just based on, you know, just because they both have stock symbols doesn't mean they're the same thing or are similar in any way. All right, so let's get on to GameStop once again. Position continues. I continue to be short this. You can see the price action over the last couple days here, if I get out of the way real quick. And we can see we have had a little bit of a sell-off after this recent high of 192. But, you know, it's all over the place, and very little volume makes this stock move a lot. A lot of these tops we saw here, like for example 2 days ago, just cruised up like $5-6 on almost no volume, and thus this is very thinly traded right now, and any significant buyer or seller can move the market a lot. So, you know, the message to day traders and whatnot is to be careful, because stuff is moving. Let's take a quick look at the E-minis and thus the VIX. We see the market continue to rally over the last half of a month. We've continued this up move, and consequently the VIX has moved down and stayed in lower territory here. Let's go to a 1 year, and you can see we've really come off of the COVID spike. If we look at a 3 year, we can see just this big spike and coming down off of it, and we've pretty much made that move down off of it at this point. We could continue to roll down lower. As you see, before that big spike, we were down to about 11, and we can get there. It certainly is not difficult to get there. So I would be very careful at defending any sort of level in the VIX. Not that most viewers that watch this channel are shorting volatility at some level or are trading UVXY or VXX to the downside, but just word to the wise, this doesn't necessarily just stop and bounce off of one particular number here. And we did see the VIX get down to as low as just below 9 in 2017, and it can continue to move lower here. I mean, when we do look at a 3 year chart, it does look like we're still on that coming off of COVID thing, right? It looks very clear there when we look. That's I believe a year and a half chart of the VIX. So, and the UVXY short or VXX short trade has worked very well over the last year. Once again, we can revisit it here. We looked at this last time on the show as well, but this has worked very well. As far as the meme stocks go, my strategy here is basically to ride this lower as the hype subsides. And I believe there will be a certain point where people kind of give up on this a little bit, and we will see increased volume and a move lower. I haven't seen that increased volume and the big move lower yet, but I think it is coming for this, and I've patiently been awaiting it. It's been a while. I think I've been short this for 6 months now in one way or another, and right now my position is out 85 days. So the question is does that down move happen now, or do we roll it out again? I've added some of these patterns into the chart here just because I kind of thought it was interesting. I'm not a big chart guy, and I think a lot of this is a bunch of hogwash, but still kind of interesting. What I did was I went here on Thinkorswim, and I went to select patterns, and I basically selected them all and put them there. If you want to see what an individual one is, you can just highlight it and see it. But we see these pennants, right, where it's kind of all coming together here, and then we see downward and upward channels. If we zoom in a little bit, now, if you refresh your memory, it really depends on where you start a lot of these patterns, where they end up. Many articles came out about a month ago saying that, oh, the October 1st or October 6th is the time when this has to determine what it's going to either break one way or another, no matter what, on that day. And guess what? It didn't. It just continued to move sideways. And this could continue to move sideways for a long time, or it could break up or down. The articles that come out that seem so forceful and so confident that these people's interpretation of past events in the stock is that it's going to make some big break one way or another. They say these things with such confidence that you almost believe them at times. But the thing is people don't know what's going to happen in the future. I've said this many times before. And people who say they do are hoping and praying that they're right and lying to you because nobody knows what's going to happen. And thus, the big breakout never really happened here at the beginning of the month. We did have this kind of move up here, which collapsed in the last week or so, which makes me very happy because I wasn't having fun. I was short this, and it was up, and finally this day it kind of started moving back down again. And, that if that continues, that would be great, but we don't know what's going to happen in the future here. So in the meantime, I've just been patiently waiting. They say the stock market is a transfer of wealth from the impatient to the patient. So I'm trying to be patient with the position. Now, that doesn't mean that ultimately this position is going to work out just because I'm patient, right? You have to be patient and right as well. So we'll kind of see what happens here. I am heartened by the fact that we've had a couple down days and that we're not way back up in the 190s. But once again, we'll have to, time will tell exactly what happens here. Now, if we look at the Greeks for this position, I am paying $30 a day, which is something, and have to be mindful of that. If I had sold something against this position, when we had moved down, then I could be kind of scalping back and forth here, and I might do a little bit of that. I've tried to just kind of leave it, but if we do get another down day here, I might try to sell something against this. And what I would do in that case, I'm long the 170, 160 put spread in January. So if we look down here, we can see my position on the bottom of the screen here. If I go to January here and click on it, and pull this up, you can see here, this is my position right here. And I can change the screen here so it shows how many of each I have or I sold. So you can see I'm long 29 of the 170 puts and short 29 of the 160 puts. I have sold one $5 spread against them here. But in general, I just have the spread on. So if this moves lower, let's say I spend about $5 for the spread. It could be ultimately worth up to $10. Well, it would be great if this moved way down, right? And I could buy this spread here for $5 and sell one lower for $5. Then all my money is out of the trade. And if we end up in between those two spreads, then I score and my risk is off the table. Right now, all the money is still tied up in there. You can tell that because I have no buying power. So these are the kind of decisions we have to make. If I were to sell downside spreads against this, let's say I were to sell the 120, 110 spread 29 times against the 160, 170 spread I have, then if we actually did go below 110, then all the money I made on this spread I would lose on this other spread, and I would need the stock by expiration to be in between those prices. So what's prevented me from selling downside is the notion that we may get a big down move at some point, and I don't want to give up. It wouldn't be fun to finally be right and this moves lower, but to not make money because I had sold something against it and we just moved down, quote unquote, too far. At this point, it doesn't seem like that's a risk because the stock really hasn't moved around very much, right? Volatility of these options is 100, but the actual volatility of the stock has been less than that. If we do go to a chart of GameStop, we can pull up and look at actual volatility. So if I go to studies and go to volatility studies and look at historical volatility, we can see here, and what I'm going to do is I'm going to go to, let's go to 180 days here. This line on the bottom is actual volatility, and you can see it's down in the 20s here, right? We're not moving around very much. Now, the number of 100 is an average, so if you have one huge move and then you don't move around for a while, well, that huge move is going to make the average higher, right? So we're kind of resting on our laurels here. It was very volatile for a while, and now it's been very calm for a bit. So each day, the average volatility kind of goes lower because it's been a while since we had a huge move. Now, if we look at this day to day, it looks like it's moving around, but percentage-wise, compared with what it was doing before, where it was rallying from like 100 to 200, this stock has calmed down quite a bit. And we can see here more average volatility information. Here's 32. Up here, we're up to 41. But it's nothing like the option prices are higher than that, right? So what does that mean? That means that if we are if we're net short options, we're making money because actual volatility continues to be lower than the price of the options. And if we are net owning options, then it's not working right now, right? Because stuff is not moving around very much. Now, of course, it's going to depend on your delta and what your directional risk is, whether you're making money or not. You can still make money being long options if your direction is completely right. But in general, if you were delta neutral, or in general, options, when you're long options and volatility, the volatility of the stock is actually lower than the way options are pricing it, owning options is not going to work out. And that's been the case for a while now as the stock has kind of calmed down a little bit. Now, calming down doesn't mean that it's made a down move or an up move. It's just kind of moved sideways and calmed down. However, the option prices stay high because people are anticipating that at some point it is going to make a big move, either up or down, or both. But in the meantime, it pays to be short options, until it doesn't, until that one big move. For me, I am long this spread, so it is costing me a little bit each day, and we will see if it ultimately works or not. When you've got a spread, my spread's pretty close to at the money, right? Percentage-wise, we're not very far from it being at the money. The closer a spread is to at the money, the less the volatility levels of the stock come into play, right? A spread that's like, let's say this this spread out here, the 115, 110 spread, that's much more affected by volatility because it's out of the much farther out of the money. But when you've got stuff that's at the money, instead of looking at volatility, it's better to look at just sort of a risk reward. Okay, I'm betting $5 to make $5. Volatility moves are not going to change that as much as they would certainly change a spread like the 115, 120 or the 90, 110 type spread that's farther out of the money, or on the call side, out of the money calls. We could pull up on here under layout implied volatility and look. You can see with this stock, it's very much kind of like looks like the VIX in that the higher call strikes sometimes have higher volatility levels, a little bit of a skew to the upside, where the higher this moves, volatility actually goes up when this moves higher. And that is just, I think, just speaks to the fact that this is way pumped compared with its actual fundamentals. And that's why you have sort of a reverse skew on it here. Anyway, so that's enough gobbledygook for you for the day. I hope things are doing well in your world and trading wise. Power was out over here in the East Coast yesterday, so I was in the dark looking on my cell phone at my positions and wondering when the power would come back on. We did come back up yesterday. Be very careful if you're trading DWAC or Funware, and I wish the best for all of you. I don't suggest that you follow me as far as what my positions are, but hopefully you will follow my videos. I appreciate all your support. Thanks for watching, and we'll